Is Celsius a buy at $28 per share? And if you want to build indestructible generational wealth, is Celsius a good choice as a long term investment? The only way to know is via fundamental analysis to find the intrinsic value. I spent the last week putting together a full fundamental analysis of Celsius based on their recently reported 2024 results. I think Celsius is a great strategic investment, and at $28 per share, I have a buy rating on the stock. In my research, I discovered 5 things that got me very excited and 3 red flags to watch out for with Celsius. So, what did I discover? What is my value for Celsius stock? And what's an ideal entry point should you decide to become a Celsius shareholder? Let's dive in, find out. In this video, I will cover Celsius's recent results and what everyone is missing, what I think about Celsius stock and what my analysis uncovered, what Wall Street's smart money says and how it can impact your portfolio, and how you can use this information to build wealth and what you must do if you decide to buy. Are you an investor in Celsius stock? Why or why not? Let me know in the comments below. Celsius released 2024 results and beat estimates, and they announced a major acquisition set to close in the second quarter of 2025 that will massively accelerate growth. If you're enjoying this, please smash that like button. Let's cover the red flags first. Celsius recently settled a case with shareholders which related to corporate governance reforms. While lawsuits are commonplace with corporations, and the cost of the case was about $1 million for plaintiff legal fees, the defense of the case cost almost $53 million and took nearly a year to settle. In the past, Celsius has been a target of hedge funds shorting the stock, and this can create significant volatility. While the current short interest is only 2.6% of shares outstanding, which is very low, and it decreased recently, it is something that we need to keep an eye on. While the Pepsi partnership is a net positive, any disruptions could have a significant negative impact. Pepsi was almost 55% of revenues and 62% of accounts receivable in 2024. This is something we definitely need to watch out for moving forward.
Go in and order a Pepsi.
Here's what got me really excited. In 2022, Pepsi invested $550 million in Celsius and became the global distribution partner for the company.
PepsiCo announcing a $550 million investment in the energy drink maker Celsius Holdings as part of a long-term distribution deal. The first quarter Celsius U.S. revenue exploded more than 200% to $123 million.
This had a major positive financial impact, which we will see shortly, and it gives access to Pepsi's massive international distribution network. Celsius isn't just an energy drink. It has vitamins, no sugar, and no artificial flavors. I really like Celsius. Watermelon's my favorite. How about you? Let me know in the comments below. Sugar-free energy has more than doubled from 2020 to 2024, and it eclipsed sugar energy drinks in 2024. Celsius has nearly 10x'd its market share in that timeframe, going from 2.5% to 23.1%. Celsius has the number 3 market share of global energy drink sales, and Alani Nu is number 4. So Celsius is boosting market share and eliminating a fast-growing competitor. The $1.8 billion acquisition is a mix of cash and stock. It will be accretive to EPS in year 1, and it will drive top-line scale and growth. This is what everyone is missing. While only 5.5% of revenues currently, the international business grew 37% year over year, and it's growing at a 5-year CAGR of 37%. As Pepsi pushes Celsius worldwide, this will grow even more. When it comes to any stock, I let the numbers tell the story, and that involves looking at a company's financial statements. Would you buy a house without knowing the size, location, dimensions, or condition?
No, no, no!
That is what you are doing when you buy a stock without understanding the 3 financial statements. If you want to value companies like the world's top financial analysts on Wall Street, check out my school community, Win Like Wall Street. Just scan the QR code on the screen. The balance sheet shows us how a business is funded. If assets grow faster than liabilities, equity increases, and we win. You're not going to believe what we are going to see in the debt of Celsius. Celsius has over $890 million in cash, and it's been growing rapidly, 16% in 2023 and 18% in 2024. This is how they were able to acquire Big Beverages and Alani Nu, 2 major transformative acquisitions. Cash is king because when you have cash, you don't need to rely on banks or investors to fund your growth. Celsius has 0 debt. Celsius is the only major beverage brand with zero debt, and they have $890 million in cash. Imagine if you had no debt and $890 million of cash. Life would be pretty good. Retained earnings went from negative $12 million to positive $105 million. This is the net income that the company reinvests into the company, and the fact that this has turned positive shows that Celsius is on the path to sustainable growth. So what's the takeaway? Celsius has tons of cash, zero debt, and with positive retained earnings, the future is looking bright. The income statement shows us if the company is generating profits. We want to see revenues grow faster than expenses, which will grow profits. The way we determine how effective a company is at generating profit is via margin. Revenues minus expenses equals income. Income over revenues equals margin. If a company has higher revenues and lower expenses, it will have higher margins. If revenues grow faster than expenses, margin will get bigger or expand, which is what we want to see. Revenue has grown 4.3x from 2021 to 2024. After doubling in 2022, thanks to their partnership with Pepsi, revenue doubled again from 2022 to 2024. Alani Nu's revenue is growing at 50%, and this will provide growth at scale. Gross profit has grown even faster than revenues, 5.3x in the last 3 years, and this is one of the most important metrics for beverage companies. When we look at margins, which have gone from 40.8 to 50.2%, we see that not only is Celsius growing rapidly, but they're also reducing costs at the same time. Net income has grown 27.3x from 2021 to 2024. This is important because this is what drives retained earnings and ensures reinvestment in the business. It is also the primary catalyst for operating cash flow, which we will see next in the cash flow statement. So what's the takeaway? Revenue is skyrocketing, costs are reducing, and with the Alani Nu acquisition, Celsius is poised to dominate the energy drink industry. The cash flow statement tells us where the cash is being generated by the company, and there are 3 buckets. Operating, which is the cash the company generates internally, investing, which is the cash demanded for long-term growth, financing, which is the cash the company generates externally. When we add these together, we get the net change in cash. We want to see companies generating cash making this positive, not losing cash, which would make this negative. Operating cash flow has more than doubled in the last 2 years, driven by strong net income that the company's generating. This is what drives value, which we will see next in the DCF valuation. In 2024, Celsius made a splash with a $75 million Big Beverages acquisition. This strategic transaction provides Celsius with a 170,000 square foot modern manufacturing and warehouse facility that is expected to provide greater supply chain control, quicker innovation cycles, and greater production flexibility. Celsius has not issued debt in the last 5 years, and it has not needed to issue equity in the last 3 years. This is mainly due to the strategic partnership announced in 2022 with Pepsi, which has been an absolute game changer. From the deal, Pepsi invested $550 million in convertible preferred stock, which equates to an 8.5% equity ownership upon conversion. This deal has given Celsius access to Pepsi's distribution network, which has more than doubled Celsius's revenues in the last 2 years. So what's the takeaway? The Pepsi partnership has proved to be an incredible move, allowing Celsius to grow rapidly, make major acquisitions, and not need to rely on new debt or equity, giving the company massive flexibility. So what does all this mean for the valuation of Celsius stock? Let's cover that next. On Wall Street, we build a discounted cash flow model to measure the intrinsic value of companies. Because companies generate cash flow and we projected the 3 financial statements, we could take these future cash flows, discount them back to today to get a current intrinsic value for the company. We cannot do this type of valuation with crypto, baseball cards, or art because they have no cash flows. If you want to learn how to value companies like we do on Wall Street so you could build generational wealth, scan the QR code on the screen to join my school community, Win Like Wall Street. Also, you could check out the step-by-step video I did on building a DCF model, which includes an Excel file. The link to that video appears above and it's in the description. As you can see on the left, we take specific line items which we projected from the 3 financial statements. We use these line items to calculate free cash flow to the firm, or FCFF. To this, we add a terminal value, which is the value from the end of the model out to infinity, because the company does not stop operating when our model ends in 5 years. We discount these cash flows back to today to get to total enterprise value. To get to equity value, we strip out the convertible preferred stock, we add cash, we strip out non-controlling interest, we add associate investments, we get an intrinsic equity value of a little more than $9 billion. We divide that by the current shares outstanding, we get an implied share price of about $38.50, which compared to the current close is a discount of 38%, which is a buy rating. On Wall Street, if a stock is trading at greater than 20% discount, it's considered a buy because it gives us a margin of safety. So what does Wall Street have to say about Celsius stock, and how can that impact your portfolio? Let's cover that next.
I'm so hyped.
Analysts have a positive outlook on Celsius and see the Alani Nu acquisition as a transformative move for the company. Truist Financial has a hold rating on the stock with a target of 35. They maintained a hold rating expressing caution about the energy drink market's maturity and competitive pressures, suggesting investors await clearer growth signals. Needham & Company has a buy on the stock. They increased their price target from 38 to 40. They raised the price target due to strong quarterly performance and strategic moves, such as the acquisition of Alani Nu, enhancing Celsius's market position. B. Riley Securities has a buy rating. They increased their price target from 44 to 49. They raised the price target, citing the acquisition of Alani Nu as a catalyst for growth, expecting it to strengthen Celsius's position in the energy drink market. This is a screenshot of Cap IQ. I use it all the time for my analyses. 20 analysts cover Celsius on Wall Street. The target price ranges from a low of 26, which is a 7% decrease, to a high of 62, which is a 123% increase. The upside outweighs the downside by almost 17.5 times, 123 to 7. The median is 39.50, which is a 42% increase, and the overall rating on a scale of 1 to 5 is 2.05, which is an outperform rating.
You should seek the advice of an investment professional always. I do not know your individual financial situation. This content is meant to educate and is not investment advice.
That being said, I do own a position in Celsius. I'm a big believer in the company, and it is currently the 5th largest position in my portfolio at a weight of 8.6%. If you decide to buy Celsius, I'll tell you exactly how to build a position, which I'll reveal shortly. Founded in 2004, Celsius has been around for 21 years. It is a top 10 beverage brand recognized alongside Pepsi and Coke. Celsius is growing the energy drink category. Sugar-free surpassed sugar energy drinks in 2024, and Celsius has gone from 2.5% to 23.1% market share in the last 4 years. The Alani Nu acquisition provides growth at scale with a unique consumer base that is highly profitable. Celsius is focused on younger consumers at colleges and universities. The Pepsi partnership provides Celsius with enhanced distribution, and Celsius is replacing coffee for younger consumers, and its availability in food services locations is also making it a part of mealtime. Celsius hit a 52-week high of 99.62 in March of 2024, and it's down over 72% since then. The 52-week low of 21.10 was 1 month ago in February, and it's up almost 32% since. When Celsius announced the Alani Nu acquisition and 2024 results, which beat estimates, the stock shot up to the mid-30s. And some of you watched my previous video on Celsius from November and were able to take advantage of my valuation. Celsius is a satellite or tactical position in my portfolio. While it will not become the next Pepsi or Coca-Cola, it can become the next Monster. Celsius is also crushing the no-sugar energy beverage vertical, and it is the go-to drink for younger health-conscious consumers looking for a boost. My model shows a value of $38.50, which is a 38% discount at current levels. On Wall Street, we buy with a margin of safety of at least 20%, so Celsius is a buy at current levels, and if you decide to add it to your portfolio, this is what you should do. Decide how much capital you want to allocate to the position. I typically choose 10% as my max. Utilize limit buy orders so you're not chasing the stock. Break your purchases into pieces so that you dollar cost average into the position. If you like this and want to see another in-depth stock valuation, check out my Tesla video here or my Amazon video here. And if you found this valuable, please share this with someone who you think would enjoy this. As always, be relentless.